51 years ago, in 1969, Indira Gandhi, former Prime Minister, who also was the Finance Minister at that time, decided to nationalise 14 largest private banks in the country, which helped Indira Gandhi position herself as a radical reformer. The debate still continues whether it was good economics or good politics. That time, the focus was on building the nation. Now, I want you to fast forward to 2015, when former RBI Governor Mr. Raghuram Rajan ordered an asset quality review, which shocked the entire country with a huge pile of NPAs during the UPA era, with some big corporates featuring in the list of defaulters. Fast forward a little more to 2021, and current NDA government has now decided to denationalize two public sector banks. A lot has changed from 1969 till 2021. Hence, this time, I want to ask a slightly different question. Is it the time to take baby steps or go all out? Hello and welcome. I am Hina Gambhir. This is India Revival Mission on Times Network. Joining us on the broadcast today is Anant Narayan, Associate Professor, SP Jain Institute of Management and Research. He is also Additional Director, Yes Bank Board. We have with us Mr. Subhash Chandra Garg, former Finance Secretary, Mr. DK Mittal, who is former Secretary, Department of Financial Services, Government of India, and Dr. M. Govinda Rao, who is Chief Economic Advisor at Brickwork Ratings. Thank you very much, gentlemen, all of you, for joining us here on India Revival Mission. Mr. Subhash Chandra Garg, I want to begin this discussion with you. Is it the time to take baby steps or go all out when it comes to privatization of the public sector banks?
It's time to take the whole hog approach. Just go for the complete privatization. Nationalization was a bad decision from the economic point of view. I think 51 years of history has proved this. There have been a number of episodes of NPAs spiraling to 20%, 15% and all. There's been some expansion of branch and some expansion of credit to the poorer section, to farmers and all. But that is much lesser than the large economic cost which the country has borne because of the nationalization. The kind of capitalization which the government has to do now every year is amazingly high cost onto the nation. I think, and in 1969, this was described as a political decision. You read the RBI's history, it's very well documented. It had nothing to do with economics and development. It was largely a political decision, and it's time now to correct that mistake, that decision, and go for complete private.
Okay. Mr. DK Mittal, where do you stand? Time to go for complete privatization, as Mr. Garg has pointed out, because that was a big mistake in 1969 and time has now come to correct the old mistakes?
Well, it is very unfair to say that the nationalization was a mistake. If you look at the history of financial inclusion and the record of private sector banks and public sector banks, I think the fundamentals are very clear. Public sector banks today suffer from lack of proper governance, for which government is responsible, not because they are bad. If that was so, why the Yes Bank failed, and why there was a problem with the ICICI Bank, and why there's a problem with the Axis Bank, and why the Lakshmi Vilas Bank was acquired. So I think we can have a number of stories of the private sector banks. So privatization is not the panacea. Panacea is that we need to look at the governance that nobody wants to touch. So unless that's done, I don't think we can do a proper banking. The second part is public sector banks play a very good role in terms of giving competition to private sector banks. Today, you can have the housing loan from a public sector bank at a rate which is competitive than what SDFC and others offer. So I do not think the solution lies in going into one is into other. But the fact remains that they can't lead the government. See, they have to perform. And for that, government is responsible for improving the governance. And that requires a political will. In terms of capitalization, Mr. Subhash Garg will remember that we created a structure for creating a holding company, which would have taken care of all these issues. But somehow it has not been done through so far. So that's it.
Mr. Garg, I want you to respond to what Mr. Mittal has said. Is it time to stop phone banking, or you think selling the public sector banks to private entities will help us solve the current problem?
See, Mr. Mittal has raised an extremely important issue. The governance, the public sector and banks in last 50 years have been badly governed. But that, I think, is a hope that it can be better governed. The fact that a government owned institution is a public sector institution and a private owned institution works differently. So either we can rest on hope that someday the government will govern better, or we accept that congenitally the government system is not suited for running the private enterprises, including in financial sector, and therefore go for what is the best way of doing it. See, after in very early, about 25 years, we realized that there was a big mistake by excluding the private sector from the banking. And from 1992-93 onwards, the private banks were licensed. And that is where it has come now in last 30 odd years or 25 odd years, that the private banking has expanded to about 40% of the total credit into the system. The way the industry can be financed, the way the economy can be serviced is much better by a non-governmental institution, a private institution, rather than a government. So I agree that the governance is at the center of it, but I don't think this governance can be improved.
Dr. Rao, is denationalization the only solution at this point in time, or we can look for other ways to improve the governance? This debate has been going on since many years now, but what is it that you will like to say at a situation like this when the government has decided to privatize at least 2 public sector banks?
Thank you. Let me start with the first principles of economics. That what is the role of the government in an economy? Government has to come in when the markets fail. What is the type of market failure that you are doing in the banking system? Market failure that is a certain amount of asymmetric information and possibly some sort of a social bank objectives that have been put. Then the question arises, because see, when you have the government, government ownership, you completely change the structure of incentives. Now, if it is asymmetric information, then obviously the solution is better regulation of the situation. Now, your interference in the government's interference in the banking system is through effective regulation. And social, purposes have to be fulfilled through other instruments, and you don't really burden the depositors. After all, banks perform from the depositors. You don't burden the depositors, on the way, for your social systems. You use, taxpayers' money or some other way you do it. If that is the case, the government ownership, it has completely changes the structure of incentives in the system, and the government ownership is not the way at all from the economics point of view. Now, but at the same time, regulation has to be there both for private and public sector. Just because you have ownership by the government doesn't mean that you don't regulate. Now, years after years, crores, lakhs of crores of money has been, taxpayers' money has been put in to recapitalizing the banks, and there is always the demand for more. How will you really run the economy if you don't really have the capacity? And there is always this, the private sector is also bad. That is your regulatory failure. But if you are not able to regulate the private as well as the public sector, first of all, public sector doesn't mean that it doesn't require regulation. Second of all, the private sector, if it gets into cronyism.
Professor Narayan, just to explain to our viewers, a bank has got 2 purposes. One, to take our money as deposits, and the second, to give credit to people. Now, if you look at the private sector banks today, how many of them really, happily would want to give credit to the agriculture sector or the SMEs? I mean, they are all dependent upon the public sector banks. So if the privatization happens, where will these people be going?
Great question, Hina. And frankly, I was listening to the 3 stalwarts you put me with and learning a lot. and thank you for putting me in this panel. Look, eventually, I think I agree with what Dr. Rao said. Commercial banking has to be done on commercial interests. If there is social banking to be done, we've got the JAM Trinity, we've got direct benefit transfers. Let's use that to render social good rather than doing it via commercial banking. If I can put what the three stalwarts put together, here is where I stand, Hina. Look, there is clearly a problem that we have to resolve. Our financial services ecosystem is in no shape today to fund our growth aspirations, and something has to change. Okay, that's point number one. Point number two, to what Mr. Mittal said, there are governance issues across the ecosystem. Koi doodh ka dhula hua nahi hai. Everybody, whether it's a public sector, private sector, foreign banker, has problems. So governance issues, whether it is auditors, credit rating agencies, boards, RBI supervision, these are universal issues which are being tackled. More needs to be done. Third part, a big part of our banking, 60% of our banking, public sector banking, is in no shape to actually do its job. Unfortunately, their performance metrics are not good in terms of their non-performing assets, in terms of their level of stress assets. It's far higher than the rest of the commercial banking ecosystem. Something has to change there. Here is where I stand on that, Hina. Look at Singapore. DBS is actually owned majorly by the government of Singapore. So it's not necessary, therefore, that a government-owned bank is not good. What you need, though, is you don't want babus and netas getting involved in day-to-day banking. You want banks to be able to do their business as professional people on a level playing field with the private sector banks. Right now, you don't have that, which is where the PJNI committee recommendations were good, and both Mr. Garg as well as Mr. Mittal referred to that. Have a bank investment company which has the ownership, build some distance between the DFS and the public sector system. Second, bring the public sector banks under the Companies Act. Make them on a level playing field, get them away from the 3 C's of CBI, CVC, CAG, that private sector banks are not responsible to. Allow them to hire and fire and pay what is reasonable. Mr. Dinesh Khara gets 30 lakhs of total income for managing a balance sheet which is 40 lakh crores, which makes no sense at all.
Mr. Garg, now, since the government has already taken this decision that 2 banks will be privatized, and hopefully that will happen in the next financial year, what do you think should be the objective? To earn money or, to send some kind of a policy signal to the market?
It should be absolutely policy signal. See, the privatization of the public sector bank is a structural reform. It will not probably get much revenue to the government or proceeds to the government. It might get. It will nowhere be close. Because the SBI, I don't think, would be put onto the block anytime. Right. And minus SBI, the public sector banks, the capital invested by government is over 4 to 5 lakh crores. That will not come even if you disinvest the entire remaining government holdings. So it's not a great sort of revenue earning. The gain to the nation is more in the form of the structural reform. And that is what I think all the people, Mr. Rao and Anantran, refer to that kind of thing. The ownership comes with certain baggage, a certain kind of governance system. Today, CVC and other things have been referred. The banks are also treated as a state in our system, which requires a certain kind of recruitment policies to be followed, certain kind of discipline system, pensions and others. The DBS example is a perfect example. If you run the bank as a private bank, even if it is owned by the government, right, not as a government bank owned by the government, you sometimes can even run a private bank by in the way the government banks are run in the country, and that is what leads to problem. So I think the solution is to go for a total policy announcement that yes, over a period of time, let's say 5 years or 10 years, we will privatize all the public sector banks except the State Bank of India, so to say. And then, of course, you have to plan the strategic and tactics for the intervening period. you go through the holding company route first, or you straight away privatize 2 or 3 in the first instance and go. That's a matter of sort of staging the privatization program. But the declaration should be very clear that it's going to be a total.
So you believe that eventually, after a few years, India should have just one public sector bank, and that probably could be SBI, and rest all should be privatized?
That's my position. Yes.
Dr. Rao, I want to ask you, what should be the objective? Because we don't know what the plan of the government really is, because as of now, just an announcement has come in the budget. Should the objective, according to you, be to earn money or to send a policy signal? And, which banks should the government look at privatizing? Those which are weak, which are a liability, or those which the government can use to earn some money?
See, the problem is, as I mentioned, if I follow from what I said earlier, the ownership brings in a certain baggage, as Subhash said. The whole structure of incentives, I mean, it's a different thing, with the DBS, because see, there is a culture that has developed there. But what is the type of culture we have? What is the type of incentive structure that you have in a public sector? In the public sector enterprise, including the financial system. When you do not have an incentive structure which is congenial for a market economy, obviously there is no question of government continuing to own things. At the same time, government doesn't really have the capacity, or the RBI doesn't really have the requisite capacity to deal with effectively deal with the whole regulatory system. I mean, you can see the Mehul Chokshis and Nirav Modi is taking away money because of the lax regulation in the system, because swift sort of position was taken for granted. Sort of we always are on the learning curve. Now, so obviously we should get rid of the you are not really going to get much money out of this privatization in any case. So it is not the money that is important. It is that, you need to really get rid of the burden and then see that, the things are run in an efficient manner. Now, again, if you really send the weak banks, if you want to sell the weak banks, who is going to, take them?
Absolutely.
Who is going to buy them? Who is going to buy them? So at the end of the day, it is not going to be easy. There will be a lot of political pressure on not doing it. There will be a lot of labor, the pressure for labor incentives, and it remains to be seen how, they have made an announcement. It's a great announcement. It remains to be seen how they will proceed with this.
Okay.
But the question is, one, there was a suggestion that they bring in, public sector banks bring in competition. Competition comes in with the, multiple players, not necessarily. I mean, huge amount of taxpayers' money is given, and still they are not able to compete with the private sector banks.
Mr. D.K. Mittal, now the point is, going by what Dr. Rao has said, that, if there'll be no benefit in selling the weak banks, then that would mean that, government will have to continue pumping in more money via recapitalization, the taxpayers' money, to continue to ensure that they continue running. So how will it really solve the purpose of the problems that the banking system is facing?
So that's why I come back to my basic question. Governance issue is something which we must raise. Nobody wants to discuss that issue. And that issue is, I agree with Subhash that issue is not only for public sector banks, but similarly also private sector banks. And we should partner with the government and the RBI to see that how we address this issue. Money is bringing a lot of greed and everything else with that. And that these are the examples of what happened in private sector banks. The second point is, for country's interest, we cannot go into isms that, okay, all privatized today. No. The idea is we must live together. So we have 21, we used to have 21 public sector banks. Perhaps that number is too high. So we try to, that's why the holding company concept was promoted. Because in that concept, then you can slowly divest one or two banks gradually, and also bring down the capital much below the 50% level what is required. So I think the question is, we need to know the tactics. The tactics are also important in democracy to deliver anything. Only ideas do not work. Ultimately, it is the tactics which work. So the tactics are as important as is the If you have enough takers coming for the buying a bank, even if a I do not agree that most of the private sector banks, which have been said they are poor, they can be turned around in 1 or 2 years' time if there is a proper management. So
Okay.
I do not agree that they are so bad that they cannot be recovered back.
Okay, so the focus should really be on the governance issue. I give you the last word, Professor Nara, and completely out of time, 30 seconds.
Bring these banks under the Companies Act, remove them from the clutches of the 3 Cs, give them operational autonomy, give them a functional board. This is possible to do, and I think privatizing a couple of banks alongside sends a sharp message. There are no holy cows, and we will see how the data leads us, and we will do what is required. Once you've done that, once you've put a level playing field, I think the management and the public sector banks can do a good job. Thereafter, let's see how the data leads us. If they're able to recover, maybe we can privatize and get some money out of it. If they're doing a good job as DBS is doing, because there is less interference from the babus and the netas, great, let them operate as they are. So I would go with giving them a level playing field right now,
Okay.
operational autonomy, proper boards, and thereafter go with what the data shows, whether privatization is required or not. But I agree with Dr. Garg that keeping an open mind and not having any holy cows is the right approach to go. And being data, let's go with the data rather than going with any notions and philosophies.
All right, gentlemen, thank you very much, all of you, for joining us.